The ATRAM Alpha Opportunity Fund Incorporated has one mission: to look for the winners of tomorrow. The fund actively finds the fastest growing Philippine companies with high quality management and sound business strategies. This growth has often translated to higher stock prices. The fund has a proven track record of selecting companies outside the Philippine Stock Exchange Index that were eventually included in major indices, while most funds in the market stay within the Philippines' top 30 companies. This has led the fund to consistently outperform the market in the long term. Furthermore, the fund invests in long-term drivers of growth that could provide significant gains for investors, such as technological advancement, tourism, infrastructure, and sustainability. Invest in the potential of the best growth stories the Philippines has to offer. Invest in the ATRAM Alpha Opportunity Fund Incorporated. For more information, visit www.atram.com.ph. What is a bond fund? Why invest in a bond fund instead of directly investing in bonds of actual companies? Corporate bonds are borrowings of companies to help finance their operations. In general, bonds are interest-bearing investments. You earn interest when you buy this particular investment. Think of a single corporate bond like a plant. It grows over time and blooms. Meanwhile, a corporate bond fund is more like a garden. A garden is more satisfying than a single plant. It contains different types of plants and flowers that are carefully picked and monitored by gardeners. They are studied every day to ensure that they will grow and bear fruit. The ATRAM Corporate Bond Fund is designed similarly. Recommended to investors with a moderate risk appetite, the fund provides you returns like that of a corporate bond but invested into multiple corporate bonds, providing you more safety in case one of the multiple companies are unable to pay. Diversification is ensured to make the fund more efficient and stronger than owning a single bond. The fund pays regular annual dividends, providing you with a small stream of income. Unlike a corporate bond, the fund provides you liquidity without sacrificing the price. And lastly, the fund is actively managed and constantly studied to minimize the risk of the fund losing money. Invest in corporate stability. Invest in the ATRAM Corporate Bond Fund. For more information, visit www.atram.com.ph.
Hello and good morning, everyone. Thank you for joining this week's episode of ATRAM webinar series. I am Bea and I will be your host for today. The past quarters have been extremely eventful for the majority of us. Accelerating inflation of 6.9% in September, hitting its fastest pace in 4 years. Rising borrowing prices, relatively high debt to GDP ratio, and a record-breaking decline versus the US dollar continue to pose threats to the economy. As part of our commitment and in anticipation of what the last quarter will bring us, today's discussion will focus on important market trends, opportunities, and outlooks that will influence your individual investment decisions, as well as those of your respective business organizations. If you have questions, you may send them as early as now by clicking on the Q&A button below your screen. Before we begin, I'd like to let you know that this session will be recorded and that copies will be disseminated as well as posted on all our social media platforms. So whether you're just starting out in this world of finance and investments, or you're a seasoned investor who would like to be in the loop with the latest investment news and strategies, we have some wonderful resources to get you started. First, you can subscribe to our YouTube channel, ATRAM Studio. If you have any friends who you like this webinar but are unable to attend, a replay of this session will be posted on our official YouTube channel. Don't forget to click the notification bell so you get notified on all your devices when new videos are uploaded. Also, please don't forget to visit our website, that's www.atram.com.ph, for a more detailed information about all the funds that we offer. You may also scan the QR code to visit our official social media pages. And we would also like this webinar to be as interactive as possible, so we encourage and please don't hesitate to send your questions in the Q&A tab all throughout the webinar. And We will also be wrapping up with a quick feedback survey after the webinar. So we do hope you can share your thoughts with us about our session today and how we can further improve our webinar series. It is indeed a privilege and a pleasure to have with us today ATRAM's Chief Investment Officer, Sandra Araullo. As ATRAM's Chief Investment Officer, Sandra sits as chairperson of the firm's investments committee. She is responsible for overseeing all investment portfolio activities of the firm, and that includes formulation and implementation of strategic and tactical asset allocations, fund and security selection calls, and market risk management for ATRAM's discretionary managed accounts, and that's across equity, fixed income, and multi-asset strategies. On top of that, she is a CFA charter holder and was a member of the Board of Trustees for CFA Society Philippines from 2017 until 2019. And she is also a member of the Fund Managers Association of the Philippines. So without further ado, let's start. Hi, Sandra. How are you?
Good morning. Good morning, Bea. Good morning to all of our listeners, viewers, and welcome to ATRAM's webinar series.
Yeah. So how are you, Sandra, with all the tasks that you have to do and all the happenings in the market? So how are you doing?
Well, we are doing our best. There's certainly a lot of things to be mindful about. But this is also the time when active management is really able to add value towards investors' portfolios.
Yeah, that's great to hear. So yeah, I'm not gonna prolong it. I'm giving the floor to you so that you can share with our audience the outlook for Q4.
Thanks, Bea. So I'm pretty sure that it's not lost on our viewers how difficult the markets have been. Perhaps number of you would be more focused on our local markets, particularly the Philippine Stock Exchange market, or even Philippine bonds. But across the board, I'm sharing with you here year-to-date performances in orange bars across the equity spectrum. So on the towards the left part of the bar graphs, and in the fixed income side, no, Philippines, Asian, global, emerging markets, as well as in the commodities complex. So it's been quite extraordinary in the sense that we're seeing very negative returns across these markets. Typically, there is a negative correlation, or in a sense, when markets are all moving in one direction, that tends to be unusual. And in a situation where bond yields have been moving higher, and there is recession risk being priced in, and a lot of these other risks coming into play, equities have also been selling off. For comparison, I'm also just adding here full year performances in 2020 and 2021. So it's a bit counterintuitive, ano, even if we look back, because 2020 was the year of the pandemic. And yet you have, I mean, if you just kind of think about what's intuitive, that was a big risk event. And yet risk markets, particularly Asian, global, and emerging markets, no? So same for the Philippine equity market, and global bonds and local bonds have delivered positive returns. In 2021, it was a little bit of a mixed bag, but still risk assets, generally global equities led by the US, added returns, while on the fixed income side, it was flattish. So this year, it's a completely different story. And basically, we all know what's been causing the negative, not just sentiment, but even the fundamental and structural drivers. And key here is inflation. And on the next slide, I'm just showing here how inflation, so core inflation, when you strip out um, food and energy prices that tend to be volatile. When you take it out, you'll see from the past 5 years how global inflation is forecast to peak by the IMF at around 9.5 this year before decelerating to 4.1 or normalizing uh, downwards by 2024. So it's a slow adjustment that is being anticipated despite the policy direction or the tightening bias of central banks towards containing inflation. Inflation is uh two-pronged, or I should say there is what you call demand pull, which is what's happening in the US. So it's driven by economic activity and of demand for housing, for job, for employees, etc. And there's also what's called cost push, which is driven by on the supply side, so your input costs. So what we're seeing is a combination of both, no, globally, and particularly even for the Philippines, rather than it being demand pull, because we're just coming out of the pandemic lockdowns this year, and we haven't really gotten a lot of momentum out of that. It's really the cost of food prices, oil prices, that's stoking the higher inflation number. So I know I said this is core, which takes out these volatile prices, but there's these second round effects, no? So it's kind of feeding into itself, and it's certainly what's causing markets to price lower or to adjust or to deliver these negative returns year to date. Um, on the So I should also add that even while the IMF projects deceleration to 4.1% by 2024, this compares to an average of 3.5% in the years before the COVID crisis. And as I pointed out in beneath this headline, paths will diverge. And as we move down, it will be, while we're likely past the peak, it's going to be a painful slowdown. And we expect the wage-driven inflation in the US to be stickier than commodity-driven inflation elsewhere, particularly in Europe and even in the Philippines. On the right-hand side, it's just a projection of this path, no? So it's been pushed back. It just compares what the inflation path is projected at compared to previous meetings. So you can see that since April, July, and most recently October, it's been pushing longer and higher inflation. So that's really one of the pain points that's causing markets to be depressed right now. On the next slide, I'll talk a little bit more about what we're seeing in the Philippine economy. And as with everybody else, we are contending with the same thing, so high inflation. And this chart here just shows how it's broken down, and you can see that a big contributor to inflation has been, or recently has been, more on the input side, no? So call food and non-alcoholic. Actually, in the last print in September, the 6.9% inflation print was due to the shortage in sugar, and that's figuring in the food and non-alcoholic beverages component. There is a little bit of reprieve on the on electricity and gas, but again, as oil prices tend to spike when you have news around the Russia-Ukraine war, or even the OPEC plus plans of oil production, then you can expect that to trickle into the inflation print of the Philippines, since we're a big importer. So what we're saying here is similarly as with elsewhere or globally, um, we may be peaking in the fourth quarter of the year insofar as the inflation print is concerned, because we are seeing a bit of or at least the base. We're coming from a much higher base, and that will um uh affect the headline number from a high of 6.9 to averaging to around 5.3 for the full year. Now, that is still way above the central bank's 2 to 4% mandated target. And that's why we've been seeing the BSP getting or trying to catch up, I should say, with the tightening cycle or tightening monetary policy. So you can see there how uh, inflation or how the central bank would really track inflation and adjust policy rates to get a handle or to bring down inflation expectations. We think that because inflation is still hovering at 4-year highs, we are most likely going to we can expect another 50 basis point hike in the November meeting of the BSP. And to just put things into context, on the lower right hand chart, you see how practically 95% of both of emerging or of advanced and emerging economies to be on this hiking path. So we're not much different from most of the global economies in this regard. Where it's becoming a little bit more I should say specific or idiosyncratic is the term. What what is more specific and I guess closer to home is how the bank or the central bank hikes and even persistent inflation is affecting our currency or foreign exchange across the all economies, no? So on the next slide, as you know, the peso has depreciated significantly this year, around 13% year to date depreciation. And this is really because of broad dollar strength, meaning to say, compared to most other currencies, the dollar is really where the pain point is. So as the US Federal Reserve is hiking aggressively or bringing interest rates up aggressively, then it attracts a lot of volume, and that puts the demand for the dollar, or that's what fuels the demand for dollar, aside from the safe haven feature. And while that is the case, it is important to note that within the emerging market complex, the Philippines is underperforming, or I should say, within the ASEAN complex, the peso has weakened more relative to the dollar than a lot of our peers, and this has something to do with our debt to GDP, or the borrowings or our fiscal space. So there's a lot of moving parts, and it's very much tied to the macroeconomic management or prudent macroeconomic management, but there's not a lot of space to move within. So that's what's difficult in this situation. On the next slide, I just want to differentiate between the 1997 Asian financial crisis, where, because of the recent moves, perhaps some of you may be brought back to the last time we saw such dramatic depreciation in currencies. And it is a very, very different scenario, much different drivers. And from a vulnerability standpoint, we, including the rest of Asia, after that experience, are actually in a better state, no, from a reserve standpoint, etc. Where do we think we're going to go from here? As you know, we completely went through the 54.30 level. That was the lows, or I should say the weakest for the peso since 2018. And more recently, we went past the 57 or 56.44 previous high, which we saw back in 2006. So where to now? We are testing the 59 to 60 level right now. Very technical and very much driven by where all of the other currencies are trading at. There is a lot of intervention going on elsewhere, particularly Bank of Japan, even the Bank of England, and even our own Banco Central has been active in making sure that the move in the currency is not speculation driven, which was a big feature of the Asian financial crisis. That said, taking everything into consideration, and all of the structural changes in terms of where the global economy is in the economic cycle, we've adjusted our forecasts for the peso dollar. Admittedly, it is, I mean, your guess is as good as mine in terms of where the peso will close by the end of the year. The bias is certainly to weakness, or at least our base case for the year end is around the 60 level. Now it depends on the situation. If you are in needing dollars and needing to buy dollars for future use, buying it below 60 is good enough. Doing time averaging perhaps. But the caveat is also seasonality might come into play, where you have OFW remittances, you have holiday spending, which might keep the peso from weakening much more for the rest of the year. But again, the bias is still towards peso weakness. And we think that a lot of it, or a big chunk of it, depends on things that haven't happened yet, no? So it's a tight balance between monetary policy, what we're doing on the fiscal side, not just ourselves, but the rest of the world. So I guess at this point, I'd like to answer the question of whether are we in a global recession? So on the next slide, just to set the stage, I know that this is capturing a lot of headline talk of global recession, etc. The short answer is not yet. The long answer is there are many things that still need to happen for us to end up being in a recession. And I'd like to caveat as well that or qualify what do we even mean when we're talking about a recession. A recession is part and parcel of a regular economic cycle. Boom, bust. That's just what it is. There is what you call or there is a level of growth that is sustainable. And what tends to happen is we overshoot that or we undershoot it. And the amount of overshoot or undershoot is what's called the output gap, no? And in times or for the past 10 years after the global financial crisis, that's what happened. We were in this expansionary phase after that last recession. The COVID pandemic kind of triggered or was a catalyst for a very flash in the pan type of recession where you saw contraction in growth for a few quarters. But that had been a trigger, and you add to the mix Russia-Ukraine war, um, where it right now there are a lot of vulnerabilities that can drive the global economy towards more sustained cycle where we are bottoming out or not registering growth from a economic cycle perspective. On the next slide, I just have here the IMF estimates that was recently released, no, for their October outlook, and they continue to adjust the expectations or the forecast for growth, no, globally, in advanced economies and in emerging markets and developing economies. So there is still growth. The question is this growth above or below what is or that sustainable growth level? And for some, it's below it. For others, it's above, and that's particularly in the US where growth is hot. You will hear that kind of vernacular, and that's what the central bank is trying to cool down. The thing to point out here though is on the right hand chart, is that uncertainty of where growth will settle. So the bigger the fan, no, the blue shaded part, that's the range of possibilities. And the bottom line is the Fed has, or not just the Fed, but policymakers globally are walking a tightrope where inflation needs to be well contained. It's a bigger problem if they're not able to do that. But it's teetering at the edge of triggering protracted recession, or you are hiking rates or tightening policy rates too much that it's causing it's constraining the productivity of economy. So again, I'm trying to distill everything that's going on into a few salient points, but suffice it to say that uncertainty around growth is high. We are not yet in a recession. There is about a 25% chance right now, or at least that's what's being priced in, of a recession happening next year. And we'll just see. Now, as I pointed out, recession in and of itself is not a bad thing. And maybe let me take it back home. So just on the next slide, you'll see where the Philippines stacks up from a real GDP growth expectation for 2022. So actually, in the first quarter, our GDP rose to 8.3% year on year, and this was on the back of the lockdown or emerging from the lockdowns. No, it was bolstered by a heavy dose of household spending, and of course, after mobility restrictions have been relaxed. But for us to settle into 6.5, it means that for the second half, we're seeing, or we're some of the headwinds that we've identified being the inflation number, the higher BSP rates, and actually the higher debt levels of the country. Those are all getting in the way of very, very strong growth, or at least sustained high growth, which is not, again, necessarily a bad thing. I guess the bottom line is that where we are in a big adjustment stage locally, globally, and within this time period, there will be a lot of dislocations where many forces are at the end of the day bringing the price of an asset to where uh it's away from where it's supposed to be, and that those are the things that we're trying to capture as professional managers. So maybe just to illustrate my point, I prepared a chart or an analysis of our own Philippine Stock Exchange market. Right now, on the next slide, you'll see that, or you probably know that we're kind of hovering around the below the 6,000 level. And just looking at history and the identifying important levels for the market, even if there are no clear catalysts in the very near term, at least if anything, it's probably going to be connected to some reprieve on the currency, so some stability on the currency, and which can therefore lead to a better outlook for the Philippine equity market. But I mean, notwithstanding a lack of catalysts, the range is huge, and which means there are opportunities to be made or to be captured. So at the 6,000 or even the 5,900 level, if we go all the way down to 5,000, no, which is where we think it's critical, no, it can go one of two ways. It can break down from that, or it can be a flashing buy signal, and I think it's really more of the latter, no. Then that's about 17% to the downside, and to the upside, assuming key resistance of 6,800, around 15-17% to the upside. So down to up, you're equal, meaning the upside to downside is 1:1 practically. So for our strategies, we've actually been covering our short, or we've been positioning to a more neutral stance on the Philippine equity market. And we intend to play that range. So from the bottom to the top, just on technicals, that's 30% movement. And we, in the meantime, while things are shaping up, while more information is coming online and anchored on the views that I have shared with you earlier, it's certainly still something to focus on. On the fixed income side, just to round things out, because of these adjustments, what's different this time is you're seeing bonds giving the kind of yield that we haven't seen in a decade, and that is actually an opportunity right there. We have 10-year bonds now closer to 7.5%, no? And just assuming that 5 years from now, which is long, inflation will have returned to the target range of 2 to 4%. So that is a real return of 7.5 minus 4, 3.5% for a safe government security holding. So at least the difference now is you can see the kind of premium or term premium that we haven't seen in the last 10 years. And which is why the kind of adjustment we're seeing this year to date, is in the big scheme of things, a favorable development for the market. Of course, if it's mismanaged, if a portfolio is mismanaged, it's going to be painful. But that is why the active management is proving itself to be important. We are able to express all of these views and strategies through our managed accounts as well as our public funds. So we're quite actively managing stock levels or market levels in our Equity Opportunity Fund and our ATRAM Alpha Opportunity Fund. Negative year to date, but outperforming the market. And over time, we expect to cement that outperformance and participate in the leg up, possibly. On the fixed income side, we have our total return bond fund strategies, and even the corporate bond fund, which is able to take advantage of the higher interest rates. And our latest offering actually for our ATRAM Prime products is a diversified income strategy to really take advantage of where yields are at present. We haven't seen that since for the past 10 years, and I've been with ATRAM for 12 years. I saw that in my first 2 years, no? Not even 7.5%, 6%. Well, actually in 2018 it went there, but it went there for a week. So, but this time around, we think that it's going to be a little bit more sustained. We have an opportunity to build positions there, use our strategies to build positions, and enjoy the capital gains once yields start readjusting lower, which won't happen for the next year or two. That's it, Bea.
Thank you so much, Sandra. That's actually a great overview of the global and local markets. So before that, I just want to share to our audience that at ATRAM, we have a wide range of investments products as shared by Sandra a while ago, and our capabilities span across several asset classes that's meant to service the different investment objectives or your investment objectives. And then here at ATRAM, we also have the right funds that would match your goals and your corresponding risk-return profile. For a more detailed information about all the funds we offer, please visit our website, www.atram.com.ph. It is also with great pride that we announce that ATRAM has won several awards. So we have the Best Investment Solutions Provider Philippines 2022. That's from International Business Magazine Award. And the same award, but from World Business Outlook Awards. And on top of that, we also have the highly commended Asset Management Company of the Philippines by the Asset AAA Sustainable Investing Awards 2022. And one more to add, we have the ATRAM Alpha Opportunity Fund, which also won Best Managed Fund of the Year Award by the CFA Society of the Philippines. For today's session, we're really hopeful that we have somehow assisted you to hashtag take on tomorrow by investing your hard-earned money with an award-winning fund house, and hashtag together we can reach our goals. At this point, we would like to move on to the live questions from our audience. I'm actually seeing some questions in the Q&A tab here. So, and feel free to add more if you have questions. So I'll start, Sandra. Are you ready with the questions?
Sure.
Yeah, so I'll start with the first one. So I think this one is from our audience. So because of the turbulence in the stock market, are you recommending balanced funds, or you think you recommend to stick to equity funds?
Okay. So very loaded question, no? I would go back to the original intent or the reason for why we were, or you have been invested in the equity strategies in the first place. So it's matching objective and risk profile, no? So that's the second part. If this kind of turbulence is making you uneasy, okay, so two things, no? Ability to take risk and capacity. Ability and tolerance, no? So kung on one hand, if you're investing, and I see the question here, the investment is long term, then your ability to take risk is high. But the second component, and that is tolerance for risk. If you are, say, a fairly new investor and you followed advice that investment is long term, blah blah, so go into equity funds, high risk, But this kind of turbulence is really making you uneasy or causing you sleepless nights, 'di ba? Then there might be a mismatch, no? Um to 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 answer the question directly, I mean, that's what you need to answer to be able to answer whether or not you stick to an equity strategy or you move to a more balanced strategy. Um, what I would do personally, if I'm in that situation and I'm already invested in equities, I'll leave it alone. Because and especially if it's long term and we're talking about 10 years, for example, I leave it alone. If I have funds, if I have investable funds, um if my tolerance is a little shaky, I'm getting nervous about the market, I'll put it in bonds, in fixed income, or even balanced, because you're buying stock prices at a low. So I would add extra money towards a less risky strategy. Um I wouldn't touch my equity investments. It's the worst thing you can do right now, really. You're not saving yourself much more pain, and you're just taking away your opportunity to make back these losses in the next year or two.
All right, thank you for that answer. So I think for our investors, it's also considering the risk profile or your risk tolerance. But definitely here in ATRAM, of course, we try to give you different options as to the funds that you can invest in. So I'll go to the second question. So this one's related to, because it's a per month and Christmas is coming. So do you think there's a possibility of Santa Claus rally late this year, Sandra?
Yeah, I mean, it's in the realm of possibilities, no? As I said, we're in a very wide range, and we can easily go back to 6.5 in a week. And if it qualifies as a Santa Claus rally, then so be it. The point is, um, while the pressures are there is also the long-term pressures are there, the macroeconomic pressures are there. That's contending with severely oversold and high value propositions. And it's just a matter of market participants, supply and demand kicking in. I wouldn't well, it depends, ano. I, I think it's 1:1 eh. Upside is same as the downside. So maybe anchor it at the 6.9 level. If it's below 6.9, add. If it's moving higher than 6.9, trim. So that's how I would manage through the fourth quarter. I wouldn't take a bet. I'll buy now because I expect a Santa Claus rally. Yes, it's possible, but it's also equally not possible.
All right, so I hope Sandra was able to answer your question. So I think it's a question also from the audience. So the third one is more of which fund do we recommend? Like, is it Atram foreign funds or local funds?
At the end of the day, I really espouse diversified investing. You will never, I mean, nobody will be able to consistently pick a strategy that is going to win every single time or outperform every single time. But this is that principle of kind of not putting your eggs in one basket comes into play. And um we've seen it in action. So for example, our global funds, while in the dollar absolute terms, they're terrible. They're like, global equity markets down 19%, etc. But because the dollar is up 18% broadly, in peso terms, and because we are Filipino peso investors, mostly, the drawdown is more benign, 2 to 4% versus 12 to 15% for Philippine equity markets, 'di ba? Um so it's always good practice to spread out one's risk. And actually, in ATRAM, we offer that service. No, we help our clients determine how much do I put in local assets, how much do I put in global assets, etc., etc. But the more for those who are starting out, simplistically, start with broadest, no? So just a global fund, maybe global multi-asset fund, no? Give the active managing decision to the professional manager and balance it out, kahit 50-50 diversification. That's already enough to do away with the specific risks or the unsystematic risk that can be diversified away.
Right. So I think the main message that I also got there is really diversification, like not really putting all your eggs in one basket. All right. So I'll move on to the next. It's also more of related to that, I'd say. So what are the ways to manage risk at this point?
What kind of risk? Maraming klase ng risk eh. I suppose market risk, no?
Yes, I
it
think
goes
it's
back
market.
to the diversification. It's very, very hard to time the markets. So, even as professionals, we say that our job is, I would say, 20% trying to time the market. But we're not timing it like 100% in, 100% out. We're kind of trimming or preparing some dry powder, so to speak. So right now we have a lot of cash actually. Over the past couple of weeks, we've halved our cash positions because we've been buying the Philippine equity market just to cover our short, meaning we've sold at higher levels and now we're like buying it back. And so to manage risk, you really have to spread it out because if it's spread out, then your exposure to any one specific kind of risk becomes limited or you minimize it. Now, I have to caution against what's called opportunity risk, no? Opportunity cost. You can say na, oh, I'm just gonna sit on my money. I'm gonna put it in the bank. Oh, that's a lot of opportunity cost right there. Pinapayaman niyo yung bangko. Kasi sila, they can do things with that capital. They can lend it out. They can participate in the secondary market. And they're the ones taking on that risk and managing that risk. And so the benefit goes to them, not to you. And you are experiencing opportunity cost. So the guiding principle is always be invested, be diversified, and get the right kind of help or hire managers who can add value to your investment portfolios.
Thank you for that, Sans. So I think the next question is more related to the outlook or the slides that you had. So you mentioned about inflation and rate hikes. So the fifth is there a chance that the Fed would slow down now that US consumer spending is declining?
So very, very good question, no? And we're also asking, that's the exact question that we're asking ourselves. As I mentioned, we have a lot of dry powder right now in our strategies. And the risk is to be left behind when markets kind of change course. And when will that happen? That will happen when we see a pivot, no, from the Fed stance, from being ultra hawkish to kind of walking it back because it's now evolved into recession for the US economy. So do we see that now? We don't, because we're also watching other indicators or other things that the Fed themselves watch, particularly wage inflation in the US, jobs reports, unemployment numbers. So it's still very hot, meaning there is still a lot of demand for workers, corporates, not the big ones, maybe the smaller corporates. So Main Street, they're still very active in hiring. It's driving up wages, so that's where wage inflation comes in. And that's what the Fed is trying to cool down with an aggressive policy stance. So the problem is, or what we've seen actually since throughout the second half of the year, is a market that is trying to second guess the Fed. And at this point, we belong to the camp of not fighting the Fed. We're happy to kind of watch it closely, but we're not going to try and anticipate it too far ahead. We don't mind kind of missing a little bit of a rally because we're underweight. We're still invested, but we're not fully invested. So we don't mind missing a little bit on that in exchange for a bit more certainty around this pivot that we're all waiting for, and which can really, I mean, with how markets are, it can move pretty quickly. And so we're certainly watching for those opportunities to materialize in the markets.
All right, thank you for that, Sans. So there's actually a few more. So I'd like to thank our audience because they're very participative. So the sixth one is, while equities are on a declining trajectory, where or what asset class are performing well?
Sorry, say that again.
Equities are on a declining trajectory, what asset class are performing well?
Equities are at a declining trajectory. Fixed income, because you have real rates, you have higher absolute rates, and also, actually, that's it. From a risk reward standpoint, fixed income is where it's attractive. Fixed income as in bonds, not time deposit. So we want to have a diversified bond investment portfolio to take advantage of higher rates now. I'm looking at the questions, Bea, and I'm seeing here one from Claire. Actually, she's asking a question, asking me to reply to her question, but I don't see the question, Claire. I'm sorry.
All right,
Could you
let
repeat that
me,
na lang? Mm-mm.
yeah, if you could send your question so that Sandra can address. Yeah, but I'll proceed to the last, Sandra.
Mm-mm.
So due to the current state of the market, investors can miss out on significant possibilities. What trends and opportunities should investors anticipate in the future?
Again. Can you repeat the question?
All right, I'm sorry about that. Due to the current state of the market, investors miss out on significant possibilities. What trends and opportunities should investors anticipate in the future?
You know, I would encourage investors to go back to the basics, no? We don't need to we don't have to be looking for the next big thing, next hot thing. We're doing that, but as investors, for your personal finances or even for corporates, it's back to basics, eh. And the basics are: be invested, number one, be diversified, number two, and work together with your with professionals in terms of access, efficiency of, or keeping costs down. What a lot of investors fail to recognize is it's expensive to go in and out of the market. So if you're just trying to catch, if you're trading it, you're trying to catch a 5% move, even if you do it perfectly, you just pay away the cost, no? So things like that. Um, uh, uh, Financial services providers are like ourselves, make sure that our clients are able to access the market in the most efficient ways, minimizing costs. And we're also always trying to innovate insofar as products are concerned. So on the part of what do you need to look out for? Look out for the products that we're coming out with, because we are at the forefront of looking at these trends and bringing it to market. And I'm talking about things like, I mean, across the board, we have private debt, we have private equity, we're looking at alternative investments. Of course, suitability is comes into play, but more and more, part of ATRAM's thrust is to bring products and services to the market in an easy and efficient way and low cost way. So I hope that answers that question, Bea.
Yes, definitely. And I hope for the audience, I hope we were also able to address all your questions. But I'm afraid, Sandra, that's all the time we have for questions. But I think for our audience, feel free to, reach out for any questions. But before we wrap up, Sandra, do you have any last words you want to say?
Um, Last words. Actually, I'd like to reassure our audience and our clients that we are doing our jobs. We're doing our best to navigate through this difficult time. And we appreciate the trust that you give us. And we ask that you continue to afford us this trust so we can manage well through this difficult period. And I'm certain that we will come out of it achieving the original investment goals that we have set out for you.
All right. So once again, Sandra, thank you. Thank you for your time. And also for our audience, thank you for attending. We have a number of participants here. So we really appreciate that you really took your time to join us today. And we really hope that you were able to gain insights and key takeaways from today's webinar. So now, did you know that for as low as 1,000 pesos, you can already jumpstart your investment journey? Here's how you can invest in ATRAM funds.
Good day! If you are interested in investing with ATRAM, the leading independent asset and wealth management company in the Philippines, please visit our website, www.atram.com.ph. We have all the details you would need to know about our funds. If you would like to start investing, click Invest Now. For further assistance and account opening, you may email our client services team. If you have more questions, visit the website's Frequently Asked Questions page or ATRAM Academy page. We hope this helps. Thank you.
There you go. And if you have any further questions or would like to learn more about ATRAM, please feel free to visit our website, www.atram.com.ph. So in case you haven't registered also, we have a webinar next week, and that's with ATRAM's Head of Macro Research, Jose Marie Lacson, together with ATRAM Sustainability Research Associate Miguel de la Cruz, and they are set to discuss the importance of sustainable investing and how ATRAM sees numerous prospects for innovation and growth in a sustainable environment. So you may do that by scanning the QR code flashed on your screen, or there's also a link found here in this slide that you may type to be able to register. Again, whether you're starting out the world of finance and investments, or you're a seasoned investor who would like to be in the loop with the latest investment news and strategies, we have some wonderful resources to get you started. So we have our YouTube channel, that's ATRAM Studio, which you're seeing in the slide. And if you also have any friends who you think would like this webinar or are interested in this webinar but they are unable to attend, a replay of this session will be available and we will be posted on our official YouTube channel. Don't forget also to click the notification bell so you get notified on all your devices when new videos are uploaded. Also, please don't forget again to visit our website, www.atram.com.ph, for a more detailed information about all the funds that we offer. You may also scan the QR code to visit our official social media pages. And lastly, this is the last, so please answer the survey at the end of the webinar, because we would definitely love to know your thoughts on today's topic. And on behalf of everyone at ATRAM, we'd like to thank you again for your attendance and participation. We wish you and your loved ones continued health and safety. Have a great day, everyone, and happy lunch.